I just checked my credit score.
My credit score is a perfect 900.
When I was 18 years old,
My dad suggested that I get a loan from the bank
and pay it back in 6 months so that I could build up my credit. I didn't need the money, but I took out a $1,500 loan and then paid it back in full right at 6 months.
I also got a Visa, a Mastercard, and an American Express when I was 18 years old.
I have always maintained a zero balance on all of my credit cards. Because my credit score is so high, I'm able to borrow money at the lowest rates. For example, I have a 7-year auto loan that I got in 2018, and for the full 7 years, I pay 0% in interest. Yes, if I were to miss a payment, the interest rate would likely go up, but I've never missed a payment, so it's literally like borrowing free money. The dealership even gave me $5,000 in cash back at that same 0% interest rate. I don't think it's a good idea to borrow money, but at 0%, that was such a great deal. I didn't do anything foolish or risky with the money. I just then could put more to paying off my mortgage and pay less in interest. I remember when I was at the dealership and the finance manager looked up my credit score. He had a big smile on his face and he said, "Whoa, you have the highest credit score I have ever seen. The second highest I've seen is 894 and yours is 896. Hearing that news felt even better than having a new car, and having the high credit score that I have allowed me to qualify for 0% interest.
Your credit rating is also tied to the length of your credit history.
When I was just 6 years old, I had my very own bank account.
I remember having a bank booklet, and the bank would pay me a few cents of interest every month, even if I had less than $100 in the account.
Thankfully, my parents were always open and honest about money and taught me about the importance of it at a very young age.
The higher your credit rating, the better interest rate you can get. In the United States, your credit score is generally out of 850, and in Canada, it's generally out of 900.
Let's take a look at how TransUnion calculates a person's credit score.
Credit history provides an ongoing historical and current record of a consumer's payment activities, including accounts such as retail stores, banks, finance companies, mortgage companies, as well as credit cards. They also look at public records that may include registered items and chattel information, which is property that is movable, such as jewelry, paintings, and vehicles. They can look at court judgments as well as bankruptcies.
They also look at credit inquiries, meaning what other companies have run a check on your credit score. The more inquiries that you have, the more it can affect your credit score in a negative way.
The biggest financial decision most people make is the purchase of a home.
Qualifying for a mortgage at a great rate can have a huge impact on your cash flow and your net worth. Let's take a look at an example.
If you had a $400,000 mortgage at a 30-year term with an interest rate of 4.3%, your monthly payment would be $1,971. Using the same criteria, but with your interest rate being 1% higher at 5.3%, that increases your monthly payment to $2,207. That's a difference of $236 a month. At the 4.3% interest rate, the total interest amount over the 30 years would be $309,401. At the 5.3% interest rate amount for the total term, the total interest amount would be $394,498. The difference between the two being over $85,000. 1% makes a huge difference.
When you co-sign for somebody, it means that you're responsible for that debt. If you co-sign for someone, it can impact your credit score too. If a person needs someone to co-sign for them, that means they can't get approved on their own. If they can't get approved on their own, then this can be a huge risk for the co-signer, even if the person you're co-signing for has the best of intentions. Unfortunately, I've heard a lot of stories about people co-signing that have had good intentions, but then those friendships or relationships have become torn apart due to issues with co-signing. Personally, I would never co-sign for anybody.
I would never recommend to ever purchase something with payments or something that is buy now, pay later.
For all of those purchases are considered bad debt, in which you usually have to pay a huge amount of interest.
If you have credit cards, then try to pay off your credit card balance in full every statement, for you don't ever want to have to pay any interest.
If you have a balance owing, it's best to try and pay at least the minimum payment amount. But being in this type of situation, I would then consider that an emergency.
Credit card companies usually charge at least 20% interest that is compounded daily.
It's then really important to adjust your budget as much as you can so that you can pay off the balance owing as quickly as you can. The decisions that you make today can affect your life and your family's life in the future. Getting a high credit score is hard work, but it's definitely worth it. My latest video about having the best looking lawn while saving time and money is up on the screen right now. I'm now at 224 subscribers. Thank you to everybody for your support. If you could please subscribe to my channel, I would truly appreciate it. Save money, make good choices, and please be kind.